industry, and I can see that it was something that is really enlightening, and it was a really good course that I would recommend to everyone who wants to instill more knowledge on technical and also fundamental analysis. And yes, definitely I will recommend it to most of my friends who are in this industry and whoever who is interested in stock analytics. Thank you.
The Institute of Banking and Finance, or IBF, was established to foster and develop the professional competencies of the financial sector. IBF is dedicated to empowering practitioners with capabilities to support the growth of the Asian financial industry. It is the national accreditation and certification agency for financial sector competency. Developed by the industry for the industry, IBF Standards is a set of competency standards benchmarked to international best practices. IBF's vision is to be the Asian standard of excellence for practitioners in finance. IBF Standards covers 13 industry segments and offers a wide range of development roadmaps. IBF Standards offers accredited programs to guide a financial practitioner from licensing examinations to professional certification. IBF Standards certifies financial practitioners at 3 levels. An IBF qualified individual is one who is equipped with a broad base of capabilities and foundational competencies to undertake new roles. An IBF advanced individual is one who has acquired applied knowledge and complex analytical skills for specialists or leadership functions. An IBF fellow is an industry veteran who has demonstrated professional mastery and exemplifies thought leadership and commitment to industry. The IBF certification mark, a set of parallel elevation bars, symbolizes the close partnership between IBF and the industry. IBF certification is therefore an industry-endorsed mark of quality that recognizes individuals who exhibit professional excellence, integrity, and commitment to the industry. Be part of the IBF community of certified financial practitioners. Participate in continuing professional development programs. Avail yourself to learning resources to plan your career. There are also opportunities for mentoring and networking. IBF, the Asian Standard of Excellence for Practitioners in Finance.
Hi, good day. My name is Potong. I just attended MIW. Okay, the key things I took away actually is two things. One is a framework to actually use fundamental analysis and technical analysis and how to synergize them together such that you can actually look for value stocks and for you actually to catch on the opportunities for the shares actually trending higher or lower. And the second thing that I learned is not a lot of other courses in all those other big courses will actually offer you is actually position sizing, because in this case most of the investors will try to jump into a position right away after a jump out with their entire position out in this case. What Jade actually taught us is actually to do it in sizes such that you can actually catch on your opportunities and as well as allowing another portion of your investment to actually to ride onto the trend itself. And this can actually eliminate the psychological biases that most investors will actually fall onto it. So therefore, based on these two key learning lessons, I would highly recommend you to actually take in MIW. Thank you.
So when I came upon this topic on called behavioral finance, I started to realize that the crux of a successful investor or trader is not about selecting stock. It's about managing the portfolio of stocks they own. We manage the risk, not only just managing the risk, we also manage the psychology of ourselves. The only best way to service the client is really through a standard process, guidelines, and also to understand what the client really needs and ultimately end of the day. And this will generally help clients not only to provide the best service for clients, but also to help clients to gain wisdom, knowledge, and getting the best investment position for themselves. So that this is what I do now. The perfect strategy to me is a unique strategy that fits to the person's objective and wants.
During this class, Jay actually shared a lot of his personal experience and made certain concepts very clear to me. Like what is a trend, what is a momentum, causes actually help me to understand the technical analysis and also the fundamental side.
He's able to convey very effectively the substance
and your knowledge. I find him very pragmatic and his approach is very prudent. Join my course and learn how to make your investment work for you today.
The IHSG Advanced Manufacturing Index experienced a significant increase in trading turnover in May, surging 1/3 higher than activity in April. Yangzijiang Shipbuilding, SATS, and ST Engineering are the top 3 STI performers in May and are also part of the IHSG ADV Manufacturing Index. Their positive performance contributed to the IHSG ADV Manufacturing Index up by 4.4% in May, outpacing the STI. The IHSG ADV Manufacturing Index booked 60 million Singapore dollar net institutional outflow in May. YZJ Shipbuilding, Mermaid Maritime and Marco Polo Marine booked the highest net institutional inflow proportionate to market cap. Compared to other actively traded index stocks. All 3 reported a growth, with Yangzijiang Shipbuilding outstanding order book had grown to $16.1 billion in contract value. Mermaid Maritime reported $88.0 million in revenue from rendering of services, an increase of 102% from 1Q FY23. And Marco Polo Marine reported revenue growing by 10% to 61.6 million Singapore dollars from 1H FY2. Scan or click the link in the description to learn more about these stocks or join SGX Invest on Telegram for the latest news update. Please note this is a general commentary of historical performance and not necessarily indicative of future performance. Check out our investment courses that are up to 70% subsidized at cyberquote.com/sg or contact us at support@cyberquote.com.sg.
Hi, a very good evening, ladies and gentlemen. Thank you for joining in for tonight, this evening webinar session. How to make $1 million before your boss does, and to build a wealth through Singapore stocks. By our keynote speaker, Jay Chow, wealth manager from Philips Security, and also the IBF equity trader, and as well as the associate trainer with CyberQuote. So my name is Andy. I will be your host today. Now, do allow me to do a short administration before we pass the mic over to see Jay himself. Now, of course, during this 2-hour session, it's a pretty short 2-hour session. We want to make it more interactive for all of the individual. If you have any question during this live webinar session, for those who join in via Zoom, as well as for those who join in via this Facebook Live, do post your question in comments. For those who join via Facebook Live, for those who join via Zoom, yes, post your question into the chat or Q&A, right? So if you're facing any difficulty, likewise, you can also let us know, so as for us can rectify it as well, right? So of course, also let me just do a short intro of our keynote speaker today. As you can see on the slide here, so Jay, in fact, I think this year will be stepping into his 18 years in this Philip as a stockbroker. Now, indeed, now he's holding a wealth manager, taking care of, I think as of today, should be more than $4 to $5 million in terms of asset under management, AUM. Now, actually, Jay is renowned for his strategy using both fundamental and technical analysis to form his market insight. And therefore, earlier on, we played the videos, right, for those who are graduated from the class of this Making Investment Work course. So this course encompass both TA and FA, right? In fact, this equity investment system is the strength of what Jay has been using for this 18 years and more years to come. So of course, he also been teaching in the region as well, more than 5,000 over individual across the Southeast Asia, right? And of course, importantly, right, I think he also one of the individual who also implant of one of the component called behavioral finance into this class of Making Investment course. So indeed, like I say, please do stay to the end of session, right? Jay and myself, I'm going to share with you here how can you benefit from this IBF accredited courses. So, right? So throughout this session, please post your question into the chat and Q&A, especially when Jay who asks for any of the question from the audience. So please, you can always do that. Post your question in chat or Q&A. For those who join Facebook Live, post it in the comments column, right? So stay tuned to the end of session. So I'll pass the mic over to Jay to kickstart our session, right? Yeah, please.
Yes. Thank you, Andy, for introduction. A very good evening to everyone. Thank you for joining me today in this evening to learn how to make millions before your boss does. Yes, it's indeed a very, very common topic that a lot of people want to. In fact, everyone want to strive to become a millionaire itself. Well, this is what I've learned over the years. Even my clients, some of them may be millionaire, but majority of them they are also still seeking to become a millionaire themselves. And very often they talk to me and say, AJ, how do I achieve the target or the purpose that I want to have in order to develop, what are the things that can develop further through investing in the stock market itself? Yes, very often these are the common things that we discuss and how we can look at the overall portfolio and decide how long does it need to achieve the $1 million. And I'm very thankful that through Philip Capital itself, being 18 years in Philip Capital, I get a lot of chance to be not only engaging my own personal clients to discuss and help them to improve their wealth status, but also to the public where I represent the company in various fairs like Invest Fair or even SGX Connect. And now me being in Cybercode, I really have the passion to want to help everybody to understand how to properly make their investment work for them. And in recent years, I was also being attributed to be a SGX Academy trainer. And recently, SGX Academy has engaged me to train a group of footballers. Yes, the Singapore footballers in the Football Association in Singapore. And of course, looking at the footballers' life, they are young people. They want to really they want to fight for the passion in football, but while at the same time, they also want to understand how to prepare for the future to make their ends for the future itself. So I'm very glad there are opportunity to represent SGX, to help SGX to train this group of footballers and hope that they will become more and more financially literate. But guess what? Even in such short 1 hour or 2 hour session like today, it's really impossible to be able to share all my expert knowledge on how to make the investment work for you. So therefore, at the end of the session, I'm going to share a little bit more deeper with you on how does my course Making Investment Work is going to benefit you in your investment journey. I'm very thankful that IBF, Institution of Banking and Finance, has accredited this Making Investment course. Institution of Banking and Finance is an association that is under MAS that is being created to help to establish a professional standard for the financial market. Professionals like me, being a wealth manager or even a trading representative, in order to get my license, I need to go and take examinations in IBF itself. So having IBF accreditation, this marks that whatever I'm training and teaching through Making Investment Work course is not just based on Jay's personal experience only. It is also based on what market practitioners are practicing in the market itself. So therefore, that's why I'm able to get the accreditation itself. So that is a little bit about me and also the Making Investment Work class. But please do stay tuned until end of the session, then I can spend more time to help you to understand more about what this Making Investment Work is about and how it can benefit you in your investment journey. But nevertheless, I want to start off with today's topic to talk about why I want to talk about today's topic. In fact, when I watched this movie, How to Make Millions Before Grandma Die, this gave me a lot of inspiration and I want to talk a little bit about it, especially to the new generation. Many young people, they are hoping to become a millionaire, and many young people are now very well educated to know that it is important to manage your finance well, and also it's important to manage their retirement nest in the future. Nothing wrong. But very often I heard a lot of them, they are very, very eager. I say, AJ, can I make $1 million within a short period of years and so and so forth? Many people are very, very interested in it. Actually, I wanted today's topic to be how to make millions before grandma dies. But sad to say, I want to respect the copyright issue. I want to respect all these copyright issues, and therefore, our creative team has converted the topic to be how to make millions before boss does. Yes, Many of us are striving, everyone are striving to make the riches. But let us really think deeply, especially those of us those people who are young. Think deeply about whether is it possible to make millions. I remember when I'm young, 10 over years old, I have told my uncle, Uncle, I want to make $1 million. And my uncle give out a very loud laugh. Do you think it's really possible? So today I'm going to explore and share with you how is it possible. Yes, it's possible, but we need to set some expectation. Especially the expectation of how fast or how easy is it to make $1 million. Like in this movie, if I watch the movie, good. If I not, I'll try not to tell you, spoil the trailer, okay, of how much what's the story about. But the key thing is that this grandma is very old, and this main character, young chap, okay, I think if I'm not wrong, he should be 18 years old. He is striving to earn an inheritance from his grandmother. Okay, so this is what the story is about. But the why he eagerly want to earn the inheritance is because the grandma has only a few years left. Okay, so the next question is that, okay, how fast can I make the $1 million? How long will this grandma die? Especially after watching this movie itself. And that is the key question eventually I want to address and to help you to understand what are the steps, what are the measure, not just the possibility, how quickly as a basic person or an average person, or maybe the best word is to use a median earning salary person is able to make $1 million. How long? Is it possible or not? Okay. So let's start off with the key question is that how long a grandma will die, okay? Because in this movie, time is a constraint, and this young chap, okay, this young chap, his name is called M. And in this movie, the grandma is called Ama, okay? So M, he's trying to earn the favor, not buy, trying to earn the favor from his grandma so that he will be able to have an inheritance of a shop house from grandma, which instantly he can make $1 million. And why he has this inspiration is because of one of his friend. Okay, she has helped to look after her grandfather, and she has enjoyed her life after the grandfather has passed on. So he got this inspiration, and he wanted to really gain the favor of grandma and to earn the favor in order to get the $1 million short house. So the key question right now is this: how old is the grandma actually in the movie itself? Because by knowing the grandma age, then we will know how long more will M be able to get the inheritance of $1 million. So based on some Wikipedia search and stuff, I managed to find out that the Ama, her age is actually 79 years old. And of course, in the movie, it's talking about this Ama is having cancer and is going to die soon. But what about for normal people? What if we come out of the context of the movie and start a question? Okay, the grandma is 79 years old. How long on average will most ladies or most women live till? And from there, then we can see roughly how many years will be left for this grandma to live. So what I do is that I'm going to find the average life expectancy, okay, both in Singapore and Thailand. In Singapore, life expectancy on average for both sexes is 84 years old. And for ladies, it's up to 86 years old. Wow, very long life, okay, to me. But because this movie is in the context of Thailand, so I want to use Thailand's life expectancy, which for the ladies, for the females, will be 84 years old also. But for Thai, you will realize that the male, the life expectancy only up to 75 years old. So on the average, it's 79 years old. So it's a disparity, a difference between Singaporeans and also Thai. So meaning Singaporeans, as Singaporeans, we also need more money. to retire or need more money to live in our old age. So that's something also interesting, something for us to talk, but that one will be another topic that we can talk about. But the key is that let's focus on today. How long will the grandma live if she does not have cancer? Okay. So it's expected that she can continue to live until 84 years old, which means that M has 5 years to earn the favor. And another question is this: can he himself make $1 million within 5 years? So let's do some simple calculation, very simple calculation. If each year, if there's a total of 5 years, so each year how much must M make in each year in order to hit the $1 million mark? So I take 1 million divided by 5 years means that each year M need to make $200,000. And if I break it down into months, each month he need to make $16,666. Now, honestly, when I look at this figure, I don't make such amount of money per month. It's really very far-fetched. Okay, it's really impossible to make $16,000 to me within each year. Okay, and for 5 years to hit the $1 million one. Not many people can do so. Okay, of course, there are some jobs out there, they are more than $16,000 per month. Yeah, there are some profession that are able to do so. And for me, I see it, I think majority of us will find it impossible to earn 16,000. So when you come to this context of this movie, M is around 18 years old. Can a young person, 18 years old, make $16,000 a month? Wow, this is a lot more impossible, okay? Because to get a high salary skill, we need some specific skill, we need experience, we need training. So for a person who just out from school to earn the $16,000 is really very much of a minority thing, okay? So when I talk about minority, then in this context, I want to take minority out of context because not many people are able to achieve making a 16,000 salary a month. This boils to the next question. So majority of us Singaporean, how much money do we really make? What's the majority amount? So that we can have a gauge to understand that majority of us, is it possible to become a millionaire in the first place? So what I want to find is to find the median income. The word median means that majority of the average earners, how much income do they make? So based on the website called Dollars and Cents, I managed to find the data of Singapore median income for year 2023. Okay, of course not year 2024 because the year haven't ended yet. So based on last year 2023, the median income for Singaporeans, okay, individual monthly median income from working is around $5,200, 5197 to be exact. And if compared to 16,000, it's like 16,000 is like 3 times more, which is a lot more. But please do take note, the figure 5,197, some people say, hey Jay, I think this figure not accurate because I don't hear a lot of people are making so much money. But don't forget, as Singaporeans, we have CPF. And when we work, when we earn a salary, employers also pay CPF to us. So there's an employer CPF portion. So this is median income is included of CPF, okay? But there's also a portion which will exclude the employee CPF. That means only personal income, okay? Yes, a part of our personal income goes into CPF, but if you look at it, 4,550, I think this is quite fair because majority of people are making this median income around currently. So I would like to use this median income figure to help us to establish the baseline. Because like today's topic, how to make millions before my boss does, we need to understand, okay, what's the average amount so that we can have some target to achieve beyond it. So once we have this number, then the next question is this. Since I know that majority of us are earning around what $5,200 per month, how long does it take, assuming that we don't spend a single cent, we save $5,200 a month, 100%, how long will it take for us to become a millionaire? So some simple mathematics, okay? If each year we earn 5,197 multiplied by 12 months means that each year we earn $62,364. So to make a million, I think a million divided by 62364, it will equate to 16.03 years. Yes, it is 16 years. You need to have a baseline of 16 years to achieve $1 million. Wow, sounds pretty possible, right? 16%. However, you think about this. This is 100% saving. That means we don't save a single cent and we don't spend a single cent. Nobody, I have never hear anyone who is able to save 100% of their salary. It's impossible. Okay, so let's make some assumption. Let's say if I spend 60% of my income, which means that each year, how much do I save? I will save around $24,945.60, which is actually around $25,000. So meaning majority of Singaporean, the median Singaporean, are able to save around $25,000. So if I want to calculate how long does it take to make to save $1 million, it will take us 40 years to save $1 million. Okay, so if a young person, let's say we start work at 21 years old, okay, for ladies, for guys it's around 23. If I assume we based on 20 years old, if we save 40% of our salary of $5,200, it will take us 40 years. So therefore, by the time we hit the age of 61 years old, it should be able to get $1 million just by pure saving, not including interest, not accounting for the interest that is coming in from the savings. So when you make this calculation, okay, so now we have some better concept or better idea of how long it takes. And of course, many of us will think that, hey, wow, Jay, 40 years is really, really very long. Okay, so how then are we going to accelerate? How then will we be able to achieve the $1 million mark before my boss does? So that's where investment has to come in. That's where we have to talk about how investment can guide us to be able to achieve our $1 million goal quickly. Okay, so I'll pause here for a short moment. If any response, you may want to use the Zoom meeting chat to respond to me. I'll spend some time to answer your question after my quick water break. Okay, so that's the context of what I'm going to talk about today. Okay, so you have a better idea that, yeah, majority of people really need to take quite a fair bit of time to be able to achieve that. Okay, and if we spend 60% of how much we earn of the $5,200, it's going to take us 40 years. Okay, we still can enjoy 60% of our expenses and 40% saving. But what if I decided to say, okay, you see, if I save 100% of money, it will take me 16 years. If I only save 40% of my money, it's going to take me 40 years. What if I reduce my expenditure? What if I reduce my spending to only 40%, meaning from 60% drop to 40%? Will it be faster? Definitely, because if I save only 40%, it will take 40 years. So if I save 60%, definitely it's going to be a lot faster to reach the $1 million goal. So savings is a key point, and our expenditure, how much we spend, also will lead us to our goal as quickly as possible. So I would like to suggest to some people, let us talk about majority of people. Majority of people tend to spend 60% of their savings. I did a little bit of survey among a group of friends, but I always like to advocate and even tell myself, is it possible to only spend 40%? And if I spend only 40% of my money, how am I going to allocate my 60% of my savings? So here is my suggestion, okay? Regardless of how much you save, one rule of thumb that we have majority of savings where it goes will be like that, okay? 40%, let's say we spend only 40% of our salary, we'll be spending around $2,000. If you're earning $5,200, around $2,100. Majority of people who spend 40% of money, it's only around $2,100. So when I look into my own personal lifestyle, I look into my personal life, okay? Of course, it's based on a single person, one person, a single man. I think for myself, I spend around 1,800. Sometimes I splurge a little bit, will be just nice $2,000. But if you, my friends with family, majority of them will spend around 2,100, 2,200 range, given that they never send their children to premium school. So for me, I strongly believe that spending only 40% of the overall income is a good or a fair percentage to practice. If you spend more than that, there is something that you can think about. And if you desire to become a millionaire, definitely one of the best way is to reduce the amount of money you spend. Then for the remaining 60%, how are we going to allocate? Okay, so based on average figure, around 37% of our income are being used to save into CPF. So majority of us, our money will go into CPF. So meaning around $1,900 are being parked aside automatically, okay, mandated by our government to park inside our CPF. So this should be included in our overall plan because it's also our money that we earn, and this is being mandated that a forced saving for us to save $1,920, $22. So whatever left, whatever remaining is actually the savings of 23%, which is around $1,195. On average, round up is around $1,200. So if you are able to save $1,200 per month, well done. That's a very good thing, which I believe quite a fair bit of Singaporeans are able to do so. Okay, why? Because I heard a lot of my friends, hey, I save enough money to go travel. I ask them, oh, so where do you travel? They say, oh, I'm traveling to Europe, to New Zealand, and so on. Wow, you're just only a few months in a year, you are able to save enough to travel. So when I look at this figure, I say, oh, actually, it's actually possible because quite a lot of Singaporeans are able to save this amount, okay? Especially for single people. But if you're married, then probably the savings amount will be a lot lesser, okay? Because money are being spent to invest on your children. So what I'm trying to say over here in this slide, to start off with the discussion to is accelerate investment, is that the more you save, okay, the lesser money you spend, the faster you are going to reach your $1 million goal. And from young, this is being advocated down to me from my father. And I always have this thought for myself. I want to try to save as much as possible. I track my expenses, make sure I don't spend too much. I budget myself, and so on and so forth. So save as much as possible because this will have an impact further on. Okay. So as you can see, this pie of our income, how is it being crafted out? You see that 37% of our money are being forced to save, which is around $1,900. So we should also see how CPF can help us to accelerate our target. Because ultimately, CPF is being parked aside so that we can retire well, we can retire properly. Okay? So with this, we should also understand what is the baseline we have before we talk about how can we use the remaining 23% of our income to go and invest in something. So let's look at the baseline of our CPF first. Okay, so on average, okay, based on some average figure that I took out from this article, is around 37% are being contributed to CPF. And from my experience over the years, I have been seeing quite a lot of articles saying that there are a lot of CPF millionaire in recent years. Is it true? Or in the first place, is CPF millionaire even possible? So let's look at some numbers. Okay, so I went to calculate some numbers. If each year we are contributing 37% of our income, it will mean that $23,000 are being contributed into CPF each year. And if I assume, okay, let's make some very simple assumption so that we can derive some numbers. Let's say if I continue to contribute for 30 years, assuming flat, meaning I don't have salary increase, for 30 years, I continue to contribute a flat $23,000 per month. And given that, with another assumption that the CPF interest rate is only 2.5%. Yes, our CPF contribution is distributed in ordinary account, special account, and MediSave account. Okay, special account can have interest rate of up to 4% or even slightly more if you hit certain range. But let's keep things simple. Okay, we simplify a lot of things. I don't want to complicate too many numbers. Let's just use 2.5% itself. So I want to compound the numbers. I'm going to calculate numbers, okay, with every year contributing $23,000. How long will it take for us to reach the $1 million mark? Based on calculation, it takes around 30 years, okay, exactly 30 years to hit. So if I'm a young person at 21 years old, I keep on contributing CPF $23,000 per year. By the age of 61, 62 years old, I will hit my $1 million mark. Okay. In fact, you can even start to withdraw close to $1 million when you hit the retirement age. Wow. So what does this mean for people currently? Okay, especially for young people. When I look at these numbers, I start to realize, actually, going forward, there are going to be more and more millionaires going forward. If you talk about 20 years ago, achieving $1 million is a very difficult thing. But right now, because of our increase in income, okay, because of our increase in incomes over the years, it become more and more possible to become a millionaire going forward. So this is a baseline that is given to all Singaporeans. Okay, people who are young going forward, there will be no surprise that you become a millionaire. Really, no surprise. So, given time, over time, $1 million mark can be achieved in a very regular and disciplined way. But what is needed is that we need to be patient, patient to wait for 30 years. Okay, just simply through CPF can attain it. Now, of course, something that we can also discuss further. Now, over here, my contribution, 23,000 is purely going to CPF. We don't touch the CPF money, never use the CPF money. If you touch and use the CPF money, definitely the numbers 30 years will not be able to achieve. Okay? Well, what some people say about Jay, I use my CPF money to invest to buy into my housing, my house. Okay, so that will be another topic, but I will not bring that housing increment in HDB prices or housing prices to include in this calculation for today. But that will give us a very clear baseline. The clear baseline is that just CPF purely alone is possible, it's really possible to make CPF millionaire. But what we really tonight, many of us want to discuss and understand is this. Jay, but you see, you shorten, 40 years, with CPF is shortened to 30 years. And of course, I can still get to enjoy to spend the money. But is it possible to shorten it further? Can we become a millionaire faster? Can we reach the target at a faster speed? That's something that I always want to achieve myself since young. Yes, there are methodologies and there are ways to be able to achieve the $1 million target. And how are we going to do so? What is the baseline consideration? What is baseline strategy or planning that we need to do in order to achieve it? Remember, we have used 23% of our money, okay, leftover income, to save. And the 23% of savings, which is around $1,900, we need to plan what to do with it. Definitely, we cannot put 100%, it's best not to put 100% into cash. But we can use part of it to start to do investment. Okay? So we can plan in this manner. That's what I plan. I will use my 23% of my savings, okay, to allocate 60% to go into investment, 40% to go into emergency, because there are really times that we may face emergency situation and so on and so forth. Okay, to save for the rainy day, just in case we have lost our job, lost our income. At least there are 40% of it. So if we break down the numbers, okay, of the 23% savings, $700, $717 can be set aside to invest in stock market or invest in something else. And for emergency money, $478 can be set aside as just pure cash savings. So that is what we can set aside per month. We can achieve. So for me, I try to achieve that. Okay, every month, I'll make sure that I'll get $400 or $500 as cash saving. Don't touch, put one side. But what is remaining of my savings, I can choose to invest. But to make the whole session to be more focused, okay, today let us focus in talking about investing into shares. We can make use of these investment savings to park it and invest into shares. Yes, there are a lot of options, but tonight I want to share with you that it is actually worth it to invest into shares. Because a lot of people say, hey, but Jay, invest in shares is very risky, we will lose money. I think that investing in shares, the return is very low. Now I want to share with you some real figures, real numbers, okay? Not in short-term kind of numbers, but in the big picture number view. The best way to show that actually invest in shares can be a very good strategy itself is because of all these numbers. One of the best investment you can make, easiest, less risky investment that you can consider when investing in Singapore market is to invest into STI ETF. STI stands for Straits Time Index. It is an index to measure the performance of Singapore stock market. We can hear it over radio, news report, or even a lot of reports that we read. They will use STI as a benchmark or measurement to talk about performance of Singapore market. So very often, especially for those people who are very new into the market, I will usually advise and recommend them to start investing in STI ETF. Why? if you look at the chart carefully, you realize that actually in early 2000, the share price of STI goes up very fast and it comes down pretty fast, very sharply. But after year 2010 onwards, you realize that the STI ETF, the price of STI ETF, seems to be trading within a very good range. Okay, between $2.50 to $3.50 range. Why is it good? Because a lot of people think that, hey, invest in shares, hey, I thought share price goes up, then I make more money. Yes, you are not wrong. But when we talk about investment, sometimes we also need to factor in a factor. Factor in the factor of volatility. What if I need the money? What if I need to sell off and use the money to fit into any emergency situation? STI offers pretty much the same price, meaning during emergency situation, I don't need to sell at a loss on. Okay, chances of selling a loss is not going to be high. Yes, there are some volatility, stock market prices still go up and down, but not as sharp as many of the investment instrument out there, not as sharp as many shares that are being listed in the exchange itself. So that's one advantage of STI ETF. But end of the day, it's not just the volatility advantage. End of the day, people ask, but end of the day, I want to see that whatever invest, the share price will go up. When it go up, I will make money. So can STI ETF make money over the years? Okay, so based on 20 years figure, okay, I'll be using a 20 years average. No point using very short term 1 year and stuff, because 1 year you see the volatility, sometimes can make money, sometimes can lose money. But based on a simple calculation of over 20 years, okay, assuming you buy STI ETF on 5th July 2004, that time the price is at $1.87. And based on 5th August, price is $3.32. There is still a profit of $1.45, which represent a 77.5% increase in price over 20 years. But to make it more fair, more comparable with bank interest rate, or even say, hey, Jay, I think invest in Singapore savings bond better. We compare it by annualizing it, meaning 77% divided by 20 years. Each year, you will be earning around 3.8% based purely on the share price. 3.8%, fair enough, because if we compare with the Singapore savings bond rate, okay, it's around 3.7, 3.8%. Last year can even hit up to 4% plus a little bit. But it's fair, because you see, hey, this is actually quite comparable to the Singapore savings bond. But what is not comparable, of course, is the volatility of the price. But then, Jay, volatility, if I invest in STI, I only earn 3.8%. Then I have to face the volatility. Might as well I put my money inside Singapore savings bond. Yes, you are not wrong. But I want to tell you there is another additional advantage of investing in shares. What's the difference between investing in shares and investing in T-bills or Singapore savings bond? The key difference is this. When you invest in shares, if the company perform well, generally they will be able to pay dividends. Same thing for the Straits Times ETF, which is a basket of 30 different companies. These 30 different companies does perform well. Okay, they are considered as blue chips of Singapore. So blue chip of Singapore means that majority of company are profitable. And when they are profitable, they do pay dividends. So what this fund do is that when they receive the dividend, they will distribute back to the shareholders of the fund. So over here on the screen, on the chart right now, you will see all the dividend payout for the past 20 years. And it's actually pretty regular. 1 year pay around 2 times. So if I total up this figure, the dividend payout is a total of $1.89, which represent 101% of the cost price. Okay, If I annualize it, each year is at 5%. So if we total up the gain in share price plus a dividend payout, there's a total profit of $3.34, which represents 178% increment, nearly double. And if I annualize it, it's 8.9% per year. More double the amount of T-bills, double the amount of Singapore Savings Bond. Okay, SSB. Now, one thing also here I want to highlight to you. Let's observe the dividend payout over the 20 years. In early 2000, you'll see a dividend payout is around 3 cents, 4 cents kind of range. Okay, 3 cents, 4 cents kind of range in early 2000. But after 2010, you will start to see the dividend payout start to be around 5 cents. And in recent year, 2020s, you see a dividend payout become 5 cents and above. To most recently, it hit up to 6 cents, 7 cents. What I'm trying to imply is this. In the stock market, when you invest in shares, company will grow. Company will become profitable over time. When company become more profitable over time, they will likely to pay more dividends. So regardless of what price you buy, there is forward-looking chance that the dividend payout will get more and more. And the main advantage of investing in STI ETF is that the STI component, they will change over time. So the companies, they are not performing, they are underperforming, not performing, they will be kicked out. Underperforming companies will be kicked out and they will be replaced with good performance company. So therefore, the chances of receiving lesser and lesser dividend is going to be much lesser. Okay, the chances of STI ETF to have very sharp fall in price is also going to be a lot lesser. So this will give you a baseline of earnings. Okay, this will give you, that's why I like to encourage people to start off investing in STI ETF, get an understanding of how stock market work first. At the same time, you can also make your money work better. Okay, so there's a question from Emmanuel. Thank you, Emmanuel, for asking a question. Can an S-Pass holder invest in STI ETF? How to start investing? Now, to invest in STI ETF, what you need to have is to have a trading account, okay, that is able to buy Singapore shares. In Singapore, to buy shares, what you need to do is to open a trading account with Singapore brokerage firm. Like for me, I'm working in Phillip Capital itself. Okay, Phillip Capital will provide trading platform. Okay, and many of us in Phillip Capital, we do spend time to guide our clients and help our clients to kickstart with buying shares. Okay, but in today's session, I will not talk more deeply into that. Okay, if you want to find out more, you can ask people around who has trading accounts. And of course, there are a lot of other brokerage firms that is in Singapore that you can look out for. And yeah, not only just Phillip Capital itself. Okay, so buying shares is pretty straightforward, pretty easy. Whether you are Singaporean, whether you are S-Pass holder, whether you are work permit or PR. Okay, as long as you are working in Singapore, it is actually possible to open a trading account. You are residing in Singapore, prove that you are residing in Singapore, you have a Singapore bank account. Okay, the key thing is actually a Singapore bank account. Once you are able to have Singapore bank account, then you'll be able to open a trading account in Singapore. Okay, so thank you for a question. I cannot elaborate further, but if you want to find out more, you can ask people around, or probably maybe you may want to ask Andy later, because I cannot promote myself over here. I want to keep focusing on today's topic itself. So keep the question coming, and I'll move on with talking about today's topic. Now, so let's do some assumptions. So we have seen the past performance of STI ETF, how it performed, including dividend plus price upside. So what if I assume that going forward in the next 20, 30 years, or perhaps 40 years, STI is going to be constant, making 8.9% per year? What if I 70% of my savings, that means $700 of my savings, to just invest purely in STI itself. Okay, so per year, $717 per month. So per year, I'll be investing into this STI ETF around $8,600. So if I plunge this figure in for the next 30 years based on a return of 8.9% per year, okay, I'm just doing some very simple calculation. How long does it take for me to accumulate my savings in STI ETF, okay, to hit $1 million, okay? So this is a calculation I made. So by the 28 years, you'll be able to have $1 million worth of STI ETF. Now, this is based on 700, don't forget it's based on $717, okay? Not based on the CPF. CPF one is around $2,000 plus. This one is $717. So $717, 28 years of saving $717, you can have $1 million worth, okay, with compounding returns of 8.9%. So STI ETF can hasten our target of getting $1 million mark. But of course, we want to see the big picture, full picture, because $717 is only a small portion of our overall income. So to see the full picture, we need to also include our cash savings, include our CPF money. Okay, so this is a table. This is a table that I've calculated the numbers, consolidate numbers. Left side, left column, first column is the CPF, second column is investing in STI ETF, third column is our cash emergency, assuming no interest, okay, no bank interest. So how long for our overall wealth, okay, which includes CPF, STI ETF, and cash emergency, how long will it take? So by the 18 years, okay, based on numbers I calculated, by 18 years, we'll be able to have a total wealth of $1 million. Okay, so 18 years comparing to CPF millionaire need 30 years. Comparing to our heart, if we save 40% of money, we need also around 40 years to achieve it. So just by investing in STI ETF itself, it has already helped us to accelerate, okay, accelerate our time to be able to achieve $1 million mark. Okay. Okay, there are some questions from May. Okay. Are there any other good S&P ETF in Singapore dollars? Okay. Now, I'm going to talk about all this in Singapore dollar context, okay? Because a lot of people would like to invest in US. Yes, investing in US market, nothing wrong, okay? But based on my experience, in comparison of Singapore market and US market is a lot more volatile. Okay, that's one. Number two, why I want to invest in Singapore market, I prefer to focus on Singapore market, is because I don't want to experience the exchange rate differences. Okay, because if I use S&P 500 to compare over 20 years, 30 years, then the exchange rate, there is also volatility and stuff. So it will complex the whole formula. Okay, so that's why I simplify today's context towards Singapore itself. So if you want to use in the same concept or same manner to invest in S&P 500 ETF, not wrong, okay? But the problem is that it's in US dollar base. There's no Sing dollar based context. Another thing about why I don't invest in US S&P 500 ETF and so on and so forth is because Singapore STI ETF, the dividend yield, okay, the amount of dividend it pay per year is much more higher than S&P 500, okay? For me, I think it's more predictable to achieve a dividend income than to predict how stock market prices fluctuate. Okay, it's very hard to predict stock market fluctuation. Okay, that's what I'm trying to imply. That's why I prefer to look at something more stable. But of course, stability comes with a price. The price is that the share price doesn't increase as fast as other. I agree. Okay, there are a lot of people who always question me, AJ, why you still stick with Singapore market? Go US market, like you say, a lot of people make money in US market. Yeah, a lot of people make money in US market. I also make money in Singapore market. Okay, so okay, another question. Will US ETF equivalents like a VOO S&P give a higher yield compared to STI? Yeah, that's something for you to find out. I didn't research into that, whether S&P 500 is going to make higher yield. But just now I have explained, the complexity comes with the exchange rate. Okay, because exchange rate also fluctuate. And if you got time, if you're interested, you are very focused in US market, you want to compare, please do compare with STI ETF and let me know lah. Okay, because that one really require a lot of time to do all this calculation. But as you see, when I want to do any baseline context, want to do any baseline ideology or philosophy on how we should be investing, the best is simplify things first. If you complex things, then there are a lot of other factors that are coming in that that can change the numbers very greatly. Okay, so that's why I want to use Singapore context, which is more relatable for more people. Okay, it's easier access for a lot of people and easier to understand for more people. That's why I hope that you guys understand my baseline is here. I want to simplify a lot of things. Just like how in my making investment course, I want to simplify a lot of very complex things to be as simple as possible. And when you are able to understand simple things, and you start investing, then you can see your money start growing. No need to have very sophisticated method to see your money grow, really. Okay. And of course, like just now the previous question, hey Jay, why don't we invest in other things and stuff? I totally agree. Okay, it's not just STI ETF. But just now I started STI ETF is to use as a benchmark, okay, as a baseline. Because today's topic is talk about how to make millions before boss does. So if a boss is your baseline, I also need to talk about some baseline for us to measure whether you can do it better or not doing it better. So 8.9% is a baseline, a kind of return that we can look at and look forward to achieve based using STI ETF itself. Nevertheless, there are a lot of other stocks that can perform better than STI ETF itself. So one of the ways is that a lot of people advocate, you just invest in blue chip stocks. Will do. What if you invest in Singapore blue chip stocks itself? So one of the popular blue chip stock that people like to invest in fact, it takes the most heaviest weight in STI ETF, is actually DBS itself. So I want to use this DBS context as a extreme, okay, another extreme comparison to help you to understand, hey, there is this kind of possibility. So if I use the $717 to invest in DBS, how well will I do? Let's say 20 years ago. So this is a chart of DBS for the past 20 years. The share price started in 17 July. Okay, this one the chart I take from 17 July 2004. It's a price of $11.75. And after 20 years, the price is at $34 already. Yes, the share price has been increasing over time. Very good blue chip performance for DBS. So it's a total of $22.36 gain, which represent 190%, nearly double. If I annualize it, it's 1 year, 9.51%. You see, just by the price performance of DBS itself is already better than STI ETF performance, including dividend. Okay, so I also want to put the extreme side. Thanks for the question just now. Yes, it helped me to bring forward to talk about there are some particular shares that we can invest in. And yeah, at the same time, DBS is also a performing company, a company that is profitable. So when a company is profitable, they also pay dividend. So this is the dividend payout over 20 years. Okay. And if I total up these past 20 years of dividend payout from DBS, is a total of $15.25, representing 129%. Yes, less than the price increment, but each year is around 6.49% already. Okay. Another thing to observe, you look at the dividend payout in early 2000, dividend payout is around 13 cents, 14 cents to 15 cents range. Then in 2010 onwards, you'll see it nearly double, 25 cents range. And when you look at 2020 onwards, you'll see a dividend payout will go into 30 cents and even recently 40, 50 cents range. So do you see the same effect? Okay, as long as we stay invested over the years, one thing for sure based on track record is that the dividend payout amount are consistently growing over time. That is what investment is about. Okay, it's not about the share price only. It's about the overall picture, which a lot of people didn't see the advantage of investing in Singapore market. Singapore market has a lot of very good quality companies that has growing dividends over the years. So if I include the dividend into it, you will see that DPS, if you invest over 20 years, you will make $37.61, which represent 320%. 3 times each year is 16% average. Now, do you get a point? Okay, so that no need to go into US. Our close home, we can get very good return. But what we need to do is to be very patiently stay invested in certain companies. Okay, so same thing, if I choose not to invest in STI ETF, if I choose to invest in DBS, how fast can I hit $1 million mark using my $717? Okay, definitely faster than STI ETF. Okay, so this time round is 20 years. Just now, earlier on, STI ETF is, I'm not wrong, how many years? Okay, sorry. STI ETF is 28 years. Okay, so for DBS is 20 years. So you cut short 8 years already with the increase of the return rate of return. So big picture, if I include all my cash and CPF and stuff, how fast will it become? 15 years. Okay, it only reduced compared with previous time by 3 years. Previous time is 18 years. Why? Because majority of money are in CPF. Okay, so CPFs are fixed return, but if you invest in shares, it's not as fixed as CPF. Okay, if you invest in the correct share, good share, it will hasten. But because it's only $717 worth of savings, so you only hasten by 3 years faster. So my point is this: you can choose a safer one, like STI ETF, there will be more consistency. Yes, the price or the return can be slower. You can also choose a great stock like DBS, which can give you 300% return over the years, each year around 16% per annum kind of return. Yes, but the problem is this: you are putting your eggs in one basket. Who knows? What if you don't invest in the correct stock? Okay, you don't invest in correct stock. If you put all your money in DBS, good for you. But what if you invest into another stock which is known to be a blue chip in the past? Okay, 20 years ago, a lot of people talk about Singpost. Okay, we talk about snail mail. It's an industry sure need one. But now nobody knows that email is replacing communication. Nobody knows that now handphone, WhatsApp, all these are replacing communication. So if you happen to accumulate and buy into companies like Singpost, the business did not continue in the long run. It can happen like that. The share price eventually drop over 20 years. So in Singpost's case, it's a loss of 47%, which represent a loss of 2.4% per year. Oh, like that. With a loss means that there's no hope in becoming $1 million? Yes, but also no. Why? Because if you invest in good performing company from the start, don't forget Singapore market, majority of shares do pay dividends. So SingPost does pay dividend. So if you add in the dividend payout of 99 cents, okay, it's actually not a loss. It has still profit. It's just that the profit is lower lah. If you analyze it, it's still 3.7%, which is comparable to people who put their money and invest in Singapore savings bond or T-bills, about the same. Okay. Now, one thing to take note about SingPost, hey, like that, Jay, like that, continue to hold on to take dividend now. But you have to be careful because if you look at dividend payout, last time used to be around 2 cents or 1.5 cents like that. You see the latest dividend payout has dropped to only 0.05. Okay, less than half. Okay, that is 60% or 70% drop of dividend payout value. So there is a risk. What I'm trying to say, there is a risk. No doubt we can choose and invest in very good performing funds or even good performing companies, but there is still also a risk that it may end up wrong because nobody can predict what will happen in the next 20 years. Okay, 100%, I cannot predict 100%. There is still risk of investing in companies like SingPost. Some more, if we want to get a return like DBS, means that you have to put all your eggs in one basket to get the return. Okay, so if I invest in SingPost, what is the impact eventually? The impact is this. To get $1 million mark by the 30 years is still $500,000 only. You can't get there. Okay, it is going to be a lot longer. You're going to drag your whole time horizon to achieve $1 million. And if I include my CPF, thankfully with CPF, okay, we still possible to achieve $1 million mark, which is by the 21 years. It's still possible. But it's SingPost that you drag the overall achievement. Okay, so I'll pause here for a short moment for a quick water break. If you have any questions or anything to discuss, please feel free to use the Q&A function. So eventually, what does it take to become a millionaire? Actually, it's pretty straightforward. It's pretty simple. To become a millionaire, it's all about accumulation. Okay? The underlying concept is all about accumulation. You accumulate, don't spend the money. You spend less. The more you accumulate, the easier it is going to be for you to achieve. However, to hasten the time to achieve to become a millionaire, you need to invest wisely, because if you invest in companies that are like SingPost, it's going to drag the time frame longer. Okay, it's going to be slower to achieve the target. But I think there's one underlying psychology or underlying thing that I want to encourage everybody, especially for youth. When I'm younger, I'm very eager to earn a lot of money. So I went to invest, which turned out to speculate. Actually, it pulled me off many, many years of my target to become a millionaire. Yes, I haven't become a millionaire right now, very close already. In a few more years' time, I'll be able to achieve it. But what I learned over time is this. What is really important is you have to be patient to accumulate. You have to also have discipline to spend lesser. I have friends flying to Europe, going US, so much. So I'm so envy of them. I can only fly to neighboring countries. I can only go to as far as Bangkok, or the furthest I went is Australia, or if I'm extravagant, one time Japan, over my past 20, 30 years. I'm spending lesser. Why? Because I know that the amount of money that I save, I can use it invest, and this investment money can help me to achieve my personal $1 million target as far as possible. But this requires a lot of patience. It requires a lot of stopping myself from being extravagant in spending things. So that's the secret to become a millionaire. can be achieved for majority of us. But how to be able to do it before your boss does is this. You need to learn how to invest in right companies. You need to prepare yourself, because if you are able to invest in right company, something like DBS, you're going to achieve your goal, your dream, much more faster. That's where my course, Making Investment Work course, will come in. Like the course name imply, is to teach you how to make the investment work for you, not the other way around. Because I have seen a lot of people who say, hey Jay, I want to become full-time, or they are always looking at their phone, looking at the stock market share prices going up and down. I felt that they're actually working for the investment. They are spending time on it. For me, investing in stock market is passive in nature. I don't need to go and watch the market whole day. Like, even though it's my profession, just now lunchtime, I go to have lunch with my mom, spend time with my mom, spend more family time. It's a lot more important than just making money itself. So Making Investment Work course is a course to train you to be able to achieve a passive income for yourself, that something like CPF automatically, over 30 years, you can achieve to become a millionaire. That is the mark of investment, not something that take a toll on us. So to make the investment work, we need to structuralize things. Like you see how I systematically look into many details before I come to a conclusion of an overall picture. So I set a structure for Making Investment Work course, and the structure is called the complete investment process. Because over many years of observation, I realized that a successful investor is someone who practices this process. I call it the complete investment process. The first step of the process is to define your objective. You need to know what you want. You need to be very clear of your investment purpose. Like for me, my purpose is very clear. I want to invest in something that gives me return better than Singapore savings bond, better than CPF rate. And yet at the same time, I don't invest in something the price is very volatile and keep on going up. I have to watch the market in order to make the money. And yet at the same time, I also want to get a certainty that it can provide me good passive income, not just in the current times, but also in the future time. And this will give me a very clear purpose. And of course, you need to have a clear budget. And once you understand all this, then you can look into the investment style. Okay? So I believe that in the market, there's only two strategies that we can look at. Okay, two investment styles that we can look at. Either you choose to be an investor or you choose to be a trader. Hey, Jill, I thought it's the same. People trade shares means that the person also invests in shares. No, to me, it's very distinct. There's a very clear distinct difference. Traders tends to buy and hold shares, okay, for long term. Why they want to buy and hold? Because they don't want to be involved too much in the shares itself. So usually they will buy and forget. Buy and forget, I call it passive in nature. However, for trader like to buy in and out. They are very actively looking at market prices movement. Why? Because they can only make money through price differences. But for investor make money based on price differences and dividend payout, also two avenues of making money. So that's why it's easier, okay, for more people to manage. So once you know what you want, then you can clearly choose what is the investment style. Because for every different investment style, there are different investment strategies. Okay, like investor, the strategy, income investing, value, growth. For traders, the strategy is trend trading, momentum, or intraday trading. And the analytical method can be very different also. Investor do fundamental analysis where it's a study of the company performance. For traders, it's a study of technical analysis, which is a study of market emotions. So there are differences. Okay, these are the differences. Thank you. One of y'all using Q&A asked me a question. Can we be both a trader and investor at the same time if approaching retirement age? The answer is yes. Okay, later I'll share with you a little bit deeper. Is it worth us to reinvest dividend via the DRP? DRP means means you will use your dividend to buy the shares. The answer is depends. Okay, it depends. But for my personal practice, I prefer to take cash. Why? Because if I take cash, I can accumulate the dividend amount and I can I can diversify my investment, buy in other company rather than just keep into one company. Okay. Now let me speak a little bit about this question also. Now, why I also prefer STI ETF over DBS? DBS, yes, make more money. But STI ETF, what they do is that they straight away diversify into 30 different companies, meaning I don't put my eggs in one basket. So when we invest, yes, it's quite impossible to 100% avoid situation of choosing shares like Singapore Post. Therefore, we need to invest in a basket of shares. But later on, I will share a little bit more on further into talking about this strategy. But what I'm talking about right here, right now, is the baseline strategy. Once we understand the baseline strategy, now I want to choose to be investor. So when I want to be an investor, then I can then craft out different strategies. Like for example, for me, I like to look at income investing strategy. So when I look into income investing strategy, then I can focus on finding stocks that are income based, finding stocks that can fulfill my requirement. That's where the second part of the process will come in. I call it the stock selection process. Okay, that's where there are a lot of different stock selection techniques or methods out there. But in making investment calls, you'll see that I'll be focusing towards fundamental analysis kind of stock selection methodology. So what I do in fundamental analysis, why I want to do fundamental analysis is because majority of people in the market are more suitable to be an investor. Why? Because we still need to earn an income. We cannot rely on our savings of $717 to make a living. It's quite impossible unless you are a person who has a lot of capital already. Yes, you can use it to make a living. But majority of us, especially for people who are younger, like in today's topic, I'm talking a lot of people who are young, they still need to continue to work to build their capital, to build their wealth. And to build their wealth, they need to stay invested. Okay. So the best way to stay invested is to use the investor strategy. So therefore, investors practice fundamental analysis. So therefore, we spend more time doing fundamental analysis. But this does not mean that I cannot adopt technical analysis. Okay. So in making investment course, I'm going to teach you how to adopt both analytical method and how to synergize them together to improve our stock selection. Okay, improve our stock selection to avoid situation like SingPost and so forth. So what do I do in this stock selection process? What I do these 3 steps of analysis. Step 1, financial analysis, part of fundamental analysis. I want to understand the financial standing of company. So how to understand a financial standing of company? By reading the company's financial statement, like the income statement, cash flow statement, balance sheet, okay, the assets and so on and so forth. So you need to train yourself to understand all these. Then you have confidence and understanding of the company's financial standing. Once you understand the company's financial standing, then you can decide whether to hold this company for 10 years, 20 years, 30 years down the road. Okay, so it's important, which a lot of people don't know how to analyze the financial analysis. But having that knowledge is not good enough. You need to also compare with the market prices. Because sometimes the market may overprice the share, or sometimes it may underprice. Of course, I would like to buy when it's underpriced. That's where pricing analysis comes in. To know whether the market is overpricing or underpricing, we can use a set of financial ratios, which we're going to learn making investment course to help you to streamline down what are the companies that meets our requirement to invest. Once it's done, then we have a short list of companies to decide to invest in. But we can't invest in all the companies that were shortlisted. Why? Because we also need to understand the market sentiment. No point knowing that this company is undervalued, is good to invest, but the market sentiment is expecting the share price of this company is going to go down further. I would like to buy low. How do I know when is the low? That's where technical analysis have to come in. So technical analysis is a study of market sentiment, is the study of how price move. That's why I call it market analysis, in order for me to find the best timing to enter the market or exit the market. What price? Is it the right price right now? What price to sell even? So that's where technical analysis have to come into play. So with this three analytical approach, it will have a holistic way of selecting stocks, which will reduce the chances of investing in wrong type of company. Okay, keyword reduce doesn't mean 100% will not face. Okay. So the analytical process sounds complicated, but don't worry, because there are a lot of tools out there that can help us to reduce our workload. Okay, many of us as an investor, we are working full-time. We don't have so much time to watch the market. We don't have so much time to even find what are the shares to invest in. So that's where we can use tools like stock screener to screen out, to streamline whether some stock meets our requirement. So in making investment calls, we are going to make use of Poem's trading platform, web-based, not handphone-based, web-based, easier. Okay, why? Because in web-based Poems 2.0, there's this stock screener function, which is a hidden gem. And this stock screener function is very powerful. Okay, you can save a lot of time and it's free. No need to subscribe, no need to pay money. Okay, so I want to do a little demonstration, okay, for you to see how we can look at how many stocks in Singapore pays very good dividend. So this is the Poems platform. Okay, you can click on the tab tools. You'll straight away go to this stock screener function. Okay, stock screener function, there are a lot of criteria based on fundamental ratios. Like for example, just now I share with you, hey, I want to look at stocks that are good dividend. So let's say I want to have stocks that pay dividend better than T-bills or Singapore savings bond, which is 4%, around 4%. What are the stocks or shares in Singapore that is paying dividend more than 4%? Just press search. You see that it will give you a list of results. At the bottom right corner, you see a total of 203 companies. Simple tool is available there free. Nobody teach you how to use. Now today I show you, hey, got this function for you to play. Singapore got 700 plus different companies, but do you realize that there are a lot of companies that are paying very good dividend? But does it mean that we need to buy all these 200 shares? The answer is no. Okay, so existing Poems has free data, free information. We can chart the company, we can learn fundamental analysis and technical analysis through Poems. So for participants of making investment work, if you don't have Poems trading account, or like just now someone asked, hey, how to invest in STI ETF, this is the platform that it can help you to invest. This is called Poems 2.0. But if you don't want to use Poems and you want to learn, you can actually subscribe to Poems demo account, okay, to understand the features of this platform itself. 30 days. So before you start making investment course, I will send you email with some videos to guide you on how to use the platform, Poems, and what are things to prepare yourself for the course itself. Okay. So like what I said earlier on, even 200 plus shares are filtered out, we can't invest in all of them. We need to further streamline the result. So how to further analyze and streamline the result? That's where my stock evaluation template will come in. This is an example of a stock evaluation template which you're going to make use of to learn. It's going to be hands-on. Okay, you no need software, no need anything. You hands-on, we will provide you with a booklet, okay, a file inside all the course material where you can hands-on and write down the information and then derive a conclusion using this form. You can photocopy this form for your own personal usage. And why I think it's important to make it a form, because maybe 1 year, 5 years, 10 years down the road, you want to review, hey, this share I buy, last time I evaluate this way, it really pick up well. Or maybe this share I buy didn't turn out well, what happened? You can use it as a reference point, manual. Okay, so using the free data from poems and stuff, that's where you can work with all this information, not just for fundamental analysis, also for technical analysis. So it's a hands-on learning experience, not I click here, and that's it. Okay, not just hearing from Jay. So the last step of the process is portfolio management. Very often, this is the portion which will dictate successful investor and not successful investor. Portfolio management is very important. But Jay, what is portfolio management? Now, very often, a lot of investment mistake is due to emotional mistakes. Okay, if you speak to people who have invested in market for quite a while, even trade, they will say, actually I make a lot of silly mistakes. Over my years in the career or even before career, I really make a lot of silly mistakes. Then I realized that a lot of times it's our behavior that is in play. So in making investment calls, you're going to learn behavioral finance, where we will understand what are the behavior biases that can cause us to make silly mistakes. Once we understand that, then we'll be able to enforce a portfolio management system, which is like this. Selecting stock, just now I will talk about, but we have to also think about how much share to buy, how do we diversify. So I'm going to train you on a topic on how to diversify also. And after buying, how am I going to monitor the stock? Do I need to watch the market all the time? How often do I need to watch the market? I also will provide you guidelines. After which, the hardest part, I can tell you this is the hardest part for majority of people. It's actually selling. Should I sell now for a profit? How much profit should I make? But what about losses? Hey, this company like Singpost not doing well. How? Should I cut loss or should I just continue to take dividend? So selling is very important. Why? Because our money, our funds are limited. If we don't sell, we won't have money to come out to find another market opportunity to buy. The faster you rotate this circle, the faster you are going to get your return. So that's what portfolio management is about. So you will see that making investment cost is a very holistic cost. It covers all aspects of an investor, or even if you think that you want to be a trader, this trader also use the same structure. So I have to break down the cost into 3 parts, 3 Saturdays, 9 to 6 p.m. over Zoom online, like how I experience right now at the comfort of home. So in part 1, my focus will be focusing on teaching you how to select stock using fundamental analysis. How to set objective, then after that, how to use fundamental analysis. Fundamental analysis is actually not very complex because I have methods to concise the thing, to simplify the whole fundamental analysis through hands-on. So it will be a hands-on session, and there will be, at the end of the session, okay, before the session end, there will be an assessment test, there will be a case study for you to use whatever you learn and you practice it. I want people to practice it, reinforce a thought, make it a habit on how to analyze certain shares. And between part 1 and part 2 will be 1 week break. That means a Saturday break. Weekdays, we can spare some weekdays to analyze the market together. So at part 1 and Saturday, I will give everyone homework, homework to do a specific stock to study, okay, using live data, live information, study, tell you which day to do the homework. Then before you come to class the next Saturday, once you have done your homework and also going through your e-learning process, then we will start the session, part 2 session, we're discussing and clarifying the homework. I will showcase to you how I do the same homework itself. So once done, then we will proceed to learn how to time the market using technical analysis. We will learn how to read market trend, support and resistance level, volume, which we call it classical technical analysis. Then we will learn tools like candlestick, how to analyze candlestick and candlestick reversal patterns, and how to use technical indicators like moving average line to enhance your chart reading, okay, to enhance your readings. This is going to be also practical. There will be also a hands-on technical analysis template, which is very straightforward and easy to learn. And there will be a case study, which is an assessment for you to go through. So in the same format, I will also give a technical analysis homework to do at home, and also e-learning on technical analysis. Then at the start of part 3 session, you'll go through to solidify your learning on technical analysis. So you see all this homework, the purpose is to build confidence that, hey, Jay not around, you can actually analyze yourself. Then lastly, then you will learn how to manage your portfolio. Okay, 2 things to manage. Learn what are the behaviors that you have. Then you learn how to manage your behaviors. Then how to set up a proper portfolio management system. So there will be case study for you to hands-on where you will learn how to record my dividend, how to calculate my profit I make, so for the whole year how much profit I make, how do I keep a record of what shares I have, and so. These are part of portfolio management, which a lot of people don't teach. Okay, so there will be a case study, a finale assessment for everyone to make sure that you know how to manage a portfolio as a total. So making investment course, you see, this is really a holistic course that you should attend to establish your foundation in investment, especially if you are young, if you are new to investment. And of course, over the years, as a lot of them feedback to me, Jay, actually, I want to learn more. I want to continue to keep on practicing how. I want to ask you a question how. I said, okay, why not I create a monthly session? In fact, this coming Sunday, I'm going to do a Zoom webinar session with my past graduate. I use myself as a leader, as a lead, as an example to share with people how I do my evaluation of the market itself. Okay, so rest assured, there also will follow. As long as I'm around, as long as Jay making investment is around, this group is going to be sustained over time. Lastly, because it is IBF accredited course, once completing a course, passing an assessment, you will get a certificate which will allow you job opportunities within the financial market itself. Surely recognized one. So before I pass the time to Andy, I strongly want to encourage everybody to sign up for making investment course. Why? Because the market always have opportunities. Without understanding how investment work, it's quite impossible to accelerate yourself to be able to make millions before your boss does. To further encourage you to think about signing up for making investment course, I want to offer myself. You see, my passion is to really want to help everybody. I want to educate everybody to be able to make the investment work for themselves. I think the best way is really to offer my personal time. If you sign up for this course, you will have a one-to-one private coaching. We will arrange your time, my time, and your time together. I'll sit down next to you to answer any question you have. Or some people say, hey, Jay, I have an existing investment position. How am I going to approach to do it? Of course, I will be next to you. Hey, why not we go through the stock evaluation form? You evaluate this company based on what you have. What do you think? Because eventually, what I want is to teach a man to fish, not to give a man a fish. Because there will be a day that I will be not around. Investment decision is your own money. You should take your own personal responsibility. So I hope this private coaching, one-to-one coaching is going to entice you a lot further. And for the more details of making investment work and the price of making investment work, later I'll get Andy in to explain to you. But before I pass the time to Andy, I thank you everyone for asking me questions and being participative with me in this session. I really truly enjoy such things. But what is more enjoyable will be seeing you in this upcoming making investment course over the 3 sessions. Wow, we evaluate stock market together is always an exciting thing for me because it will be a time for you to be able to make your investment work for you. with this, I thank you for your time, and I'll pass the time to Andy. Andy, please.
Oh, hi. Yes, thank you, Jay. Can see me and hear me well?
Yes, Andy.
Hey, thank you, Jay, our well manager. Yes, also thank you very much for those who are staying on. Also for this last 2 hour session, and of course, indeed, what Jay just mentioned to all of you here. It is very true, because why we want all of you here to take charge. We want all of you to take charge, and then I think the key word, I think earlier on Jay did mention, he want to teach you, how to fish. Then you are every time to getting a fish from the trainer himself. And therefore, this course, making investment work course, come in place. Now, I think let me just do a little bit of history to just share with all of you here pertaining to this course. Now, our making investment work course, right, is the good things that we are going to be having. A very interesting part is we're talking about the support, and also we're talking about this mainly on the IBS subsidy. So let me just browse it over to all of you here. Now, what you can see here currently is this is the course. Now, indeed, earlier on, I think Jay did mention, those who sign up, particularly for today, those who are signing up, you are given a private coaching session. Now, this session will be given to those who make a sign up today. So definitely this session, it will be provided for you. Indeed, this session will be a physical meetup session. So that will be after the course. So as you can see on the slide over here, so making investment work course, I did send to everyone in the chat. Now, especially for those also joining via the Facebook Live as well. Well, if you are today as a local citizen, you see the full cost fee is 1,962 with GST or 9% GST. So the raw cost fee actually is 1,008. So with the 9% GST is 1,962. Now, if you're a local citizen or below 40 years old, okay, or permanent resident or residing in Singapore, then you're eligible IBF 90% subsidy before GST, which is $900. So the remaining 50% with GST, which is $1,062, you can use this skill future credit for local citizen. Now over here, you can see there's an NTUC UTAP funding eligible. So which means if today, if you are joining in, you are NTUC member, yeah, good piece to share with you here. Yes, you also can use your UTAP funding to fund for the course. Now, of course, if you're citizen age 40 years and above, then you will even get much higher funding support from the IBF. That is 70% of the funding support, which is 1,260. And then the remaining 30% GST, $702 with GST. This is the cost fee payable. And same thing, now if you are citizen, then of course you have not used up your skill future credit, it's time for you to use it. Now in the next 3 to 5 minutes here, for those who have first time to use the skill future credit, just bear with me for another 3-5 minutes here. I'm going to sign in my personal skill future credit account to run through with all of you here, so for you to get to know how to go about that on the claiming using the skill future credit. This is for local citizens. Now, of course, if you are permanent resident PR, of course, the $1,062, you can use PayNow, PayLah, and online payment to make the payment, which is I'm going to run through with all of you as well. Similarly, if you are a citizen, of course, you also can use, if you're holding NTUC membership, then you can use your UTAP funding to go for it. So these are the 3-date class, 28 September, 5th October, and 12th October. Like what Jay just mentioned, break it into 3 parts, right? So the part 1 will be on the 28th September, which is next month, exactly a month from now. 28, because today is already 27 August, right? 28 September, that is on Saturday, and timing going to start from 9 a.m. and end around 6 p.m. in the evening. And then the part 2, session 2, on the 5th October, the first Saturday of October, then also Saturday, 9 a.m. to 6 p.m. And then the last session will fall on 12th of October, so on Saturday, and then timing 9 a.m. to 6 p.m. So you can see the class is 3 days in a row, right? So it's a 3 consecutively Saturday, like what Jay just mentioned. So the continuity is there. So there is you complete the first part 1, at least you got 1 week time for you to digest, and then you come back to the part 2 on the 5th of September to digest, and then come to the third session, which is on the 12th of October. So at least you have a 1 week time for you to do a digest. And that's the reason why Jay has been arranged for this course in such a setting, right? So it's easy for the course participant to digest. So at least you can come back the next week, come back on the next session again. So these are the online class. So there are some requirement. Of course, you need to have a PC, you need to have a laptop to join for the course. So that is a prerequisite requirement. Okay, now how to go about that? Now, let me just go through with all of you here for those who are still online. Now, of course, just bear with me for the 3-5 minutes here. Of course, definitely those who are in a rush, not to worry. In fact, tomorrow, after today end, we're going to do a follow-up phone call. Those who have some time, please stay on for another 3 to 5 minutes here. So let me just do a quick run through with you how to do the restoration. Now, in fact, around about 8:36 p.m., just about 5 minutes back, I sent I think couple of links over to 2 links over to the chat for everyone. So to do the restoration, you can see it will show you the detail, what is the funding support. And then if you are using SkillsFuture credit, right, you can just click on this, the SkillsFuture credit, right? You can click on this, right? Sorry, then you can come to that. But of course, most importantly, I want to share with you to do the sign up first. So to sign up the course, making investment course, just click on the link, then it will come to this page, right? So over here, this page itself is very important because you are going to do the restoration, and then the restoration is all everything, or the class itself is conduct via online session. So you click on the link, you will come to this page, and the page title is MIW, it stands for Making Investment Work, course registration. So once you come to this page and then you click on the selection of course date, there's only one course date available. That's on 28th September, 5th and 12th October. And underneath of the course date, there's a couple of fillable fields that you require to fill up. It's a required field. Please fill it up. And then you select self-paying participant and move all the way down. And over here, it will show you the different tier, which I just explained to all of you here. Now, of course, move all the way down. You can see there are total 4 payment selection. SkillsFuture credit for local citizen, Visa, MasterCard, PayNow, and PayLah. So if you desire using SkillsFuture credit, then you select SkillsFuture, then you click here. Once you click here, you'll come to another page. And you come to this page, you'll route to the page of the SkillsFuture credit. So our course itself is fall under the SkillsFuture so-called this credible, right? So basically, those who have local citizen, you have SkillsFuture credit. Yes, you can use the SkillsFuture credit to make payment. So you can see here, when you click on the link, you'll come to this page of the landing page of the SkillsFuture portal, Making Investment Work course, right? And you can see the course fee. So for you to make the course fee, it's not 1,008, it's either the 30% or the 50%. Okay. So how to do the sign in? You click on the e-services, right? Once you click on e-services, it will route to a page for you to there are total about 6 boxes. I click on the click, check, and claim SkillsFuture credit. Then immediately I click on the SingPass, and at the same time, I need to ensure to launch my SingPass app. Okay, so I click on the SingPass, click, and then at the same time, have to make sure my smartphone beside me to launch the SingPass, and then to scan the code provided. So in the next, it's come out already, in the next 1-2 minutes here. So it came out, and then I got to scan in, right? So I need to scan in the SingPass. Just give me a minute, okay? So if you need to sign in, okay? So I use on my this SingPass, okay, then I scan it, okay. Good. Then it will route to, in the next 10 seconds or so, it will route to my personal SkillsFuture page. Okay, and then you can see, in fact, those who have been receiving a SkillsFuture credit from government, make sure they have to use it, because the credit given to you, there's certain expiry date also, which I'm going to share with all of you here for those who have not started using it. Okay, so you will see here now. You see, this is my personal. Yep, loading for a while. So it's my personal page of the SkillsFuture page, and then you'll come to this page itself, and then you can see my dollar that I have given from the government. Then I can submit the claim, submit using the SkillsFuture credit. Okay, so it take a while for the loading. Okay, so this is for the SkillsFuture credit. So for people may start to say, Andy, I'm a non-citizen, I'm PR, or maybe let's say, for instance, I'm non-PR either. So not to worry, you can even join in the course. Of course, if you're non-permanent resident, then you could pay a full course fee. But it's still a very worthwhile course because you're learning a 3 complete part 1, part 2, and part 3 from someone who are in the market like Jay, more than 18 years in the market, who are able to so-called to share the detail as a professional investor himself, from a trader, become investor, and then how he actually can make it success in this stock trading for this past 18 years and more years to come. Okay, so it's still loading. Okay, maybe the internet a bit slow. Let's say this is for Skill Future Credit. Let's say for those who are using Visa Master, select Visa Master, you click here, then you route to a page. And of course, Visa Master, you also can select, you can click on the courses, and then move to the course name called Making Investment Work course. Select it, the course date will be captured. So same thing, let's say if you are so-called citizen above 40 years old, you key in 702. Okay, and then the order node is just key in MIW. And then on the right side, there's a billing information. That's where you key in all the cost detail, cost name, your personal detail, your mailing address, all completed, you click next. So the next page will appear with the two payment, Visa card and MasterCard. You just select either one, okay? And then you submit, and then it will prompt you to key in the OTP. So this is for the Visa online payment. Of course, we also accept Pay Now and PayLah. So Pay Now in this case will be connected to the you pay now to the company. As you can see, our company UEN number will be up here. So make sure you link your Pay Now to your any of the 4 local bank, and then you click the QR code. And then once you link your Pay Now, you launch your Pay Now code, launch your online app, and then scan this code. And then you're going to key in the course name, MIW, or Making Investment Work. And then you key in the course name, and then your cost fee payable, 702 or 1062. And then you submit, you show a debit for your bank, and then you'll be payment acknowledgement sent to you. Same apply for PayLah, you do the same thing. Okay, so these are the 4 payment selection. So remember, any of these 4 selection, you have to make sure you've got to fill up all this detail, right? Have to select all this detail. Okay, let me just see whether what do you call it, this wow, a bit slower today. Never mind, I try to re-sign in again. And sometimes Skill Future, they have some updating. Okay, one more time again, try to sign in to the Skill Future portal. So for those who have not started using it, please start using it, because there is a expiry date by the Skill Future also. Okay, so e-services, click on the e-services, then you mouse over, and then it will come to 5 different boxes, right? Click on that, the first box, and then it will come to a page, and then it will come to a page, and then it will come to a SingPass app. Okay. Oh, sign in already, yeah. It's cool. Okay, so you can see here, now my name over